Hey everyone, me Kevin here. In this video, we're going to be talking about SPARCs and what sparked SPARCs and comparing SPARCs to SPACs. Yeah, now there's a lot here to digest, but we're going to make it really easy because I have a feeling these are going to become just as popular as SPACs were in 2020, at the beginning of 2021, and now you're going to start seeing these things trading on markets called SPARCs, and you got to know what they are. So first, to understand SPARCs, you have to understand SPACs. Remember that a SPAC is really consistent of a blank check company that leaders or promoters and their attorneys put together. Then they get a pool of investors, the pipe, and they raise money together, usually at a par value of $10, though sometimes $20. And the individuals who invest get a share of this SPAC at whatever the par value is, so $10 or $20. And then there are also warrants that people could invest in, which are basically just options, call options, to be able to purchase more shares at some point in the future when the company itself calls for redemptions. Now, don't worry, if you lost any of that, not that big of a deal. But the most important part is that a SPAC is just a bundle of money that is public, and it's looking to take an existing company that's private, public. And so they merge together, and now they're public together. And then they change the name, and perfect, you're done. Now you've taken a company that wasn't public through this streamlined SEC review process known as a SPAC. It's had one heck of a reputation, though, because a lot of SPACs IPO with these investor presentations that aren't exactly this realistic presentation of what the company is likely to do, but instead there are a lot of hopium about what the company might do. And because they're SPACs, they go through less regulation, so a lot of these pro forma statements are accepted. Now, here's the thing. NASDAQ has reported that on average, the first day that SPACs end up IPOing, they tend to run up about 18%. Obviously, there are a lot of variables here, but that would be about $1.80 profit on average per share on IPO day. But now this is where things get fun. Wouldn't you like the opportunity to buy a potential SPAC at whatever the IPO price is? So let's say, for example, DWAC, the Donald Trump SPAC, goes from $10 to $50. Wouldn't it be nice to have the right to buy shares at $10? That'd be pretty cool, right? And since the average expected IPO profit is $1.80, it would seem that the value of being able to buy shares at an IPO price for a SPAC would be somewhere between maybe $1.80 and some larger number, depending on how valuable people think this IPO is actually going to be. Well, that's where SPARCs come in. Special Purpose Acquisition Rights. And then a company. Because remember, a SPAC is a Special Purpose Acquisition Company. But a SPARC is a Special Purpose Acquisition Rights Company. And Bill Ackman is going to be one of the first to actually do that through his Pershing Square Capital Management Company. He has filed for the first SPARC. Now, if instead of buying a SPAC where you get shares, you're interested in a SPARC, you're going to get the right to buy shares of a company at IPO for $0. And you're going to be able to trade that right on the public market. So that means on the public market, we're going to start seeing SPARCs floating around at maybe $5. And that would mean you're paying $5 for the right to pay $10 for that company when it IPOs. Now, what's interesting is the way this works is when the SPARC finds a target company, it asks the investors for money to merge. However, before it finds a company, these rights are assigned and they're allowed to be trading on stock exchanges. And since SPARCs don't raise money in advance, there's really no fixed amount of the SPARCs that could exist or these rights to buy something at IPO price. Basically, it's a blank check company. It's like literally like a blank check company used to be, hey, here's $500 million, go find a company. You know, we all paid in $10 per share or whatever, go find a company and bring it public. Now it's kind of like, hey, here are all Bill Ackman's friends who are like, sure, yeah, we'll take your SPARCs, who can then, if they want, sell these rights on the stock market, and then they'll have trading value. Remember, how much they're worth really depends on how much the company is expected to be IPOing for, because all it is the right to buy the company at the IPO price. So the way SPARCs are going to work compared to SPACs is SPACs, you raise money, you find a company to merge with, usually within 2 years. You pay the promoters a big fee. You get massive commissions. Like, this is how people like Chamath get rich off doing these SPACs. And boom, the company goes public. Like Open Door or SoFi, for example, goes public. People who got in at $10 are doing great. And the people who bought later, well, they're buying later. They're investing in an earlier stage company. Now, remember, SPACs can also go below $10. Look at Shift Technologies. Look at Hippo. Look at any number of SPACs. Look at Beachbody, right? Not a surprise. These things can go under $10. That's because oftentimes they're overvalued at $10. Now, investors with a SPARC have a cool opportunity where they're not putting any money up. They have the right to buy shares thanks to that SPARC. Unless they sell that SPARC, they have the right to buy shares at IPO price, and they get a new SPARC for the next deal that manager puts together. So it kind of incentivizes you to actually buy the shares at IPO, because then you're going to get another SPARC or the right to buy the next deal. So the cool thing here is you'll at some point see these weird instruments trading on the market that are just basically rights to buy at IPO price. I expect them to be incredibly speculative, but people are going to be likely very excited about these, because if they go in on IPO price on one time, they'll be able to do it again in the future. It's almost kind of like having an NFT right to buy these SPACs, or now SPARCs, at IPO, which is kind of crazy. So now it comes down to really betting on how good of a job you think the promoter, like somebody like Bill Ackman, will be able to do, and how quickly do you think he can pull it off, and how many times do you think he can pull it off. The cool thing is it's going to be easy to market these acquisition rights. So for example, if a potential acquisition is announced and the SPARC value starts trading at $3 or $4, then the understanding is that, hey, investors must like this idea because obviously it's worth whatever we expect the IPO price to be, plus $3 or $4, because maybe the expectation is that it's going to run even beyond that. So a potential acquisition, let's say it's announced with a SPARC and then the value drops to like 25 cents or something really low. This would kind of be a sign that investors are saying, uh-oh, that's probably not going to IPO well, or it'll fall after IPO like Robinhood. But anyway, the instant feedback could actually end up being very valuable for somebody like Bill Ackman, the promoter, to see, hey, is it a good idea to be bringing this company public? Or should we potentially look for a different company, if this one's not going to work out because maybe the market doesn't like it. So anyway, of course, all of this needs SEC and regulatory approval. And right now, SPACs are not loved by the SEC. So we'll see how SPARCs, the evolved form of SPACs, end up working out. I mean, I really feel like this is like a Pokemon, like Bulbasaur evolving into Blastoid. Like, it's just continuing to get more complicated, and we continue to get new fangled ways of losing money and becoming bag holders. But at the same time, this could also improve or at least improve on some of the faults that the SEC sees with SPACs, specifically with, hey, like, what if the company isn't worth $10 at IPO? What if it's worth $5 at IPO? Well, whatever that number is, it could be a little bit more of a floating valuation. Whoever has a SPARC will have the right to be able to buy it at IPO. So it's kind of cool. We'll see how the SEC responds to this. The NYSE so far seems interested in this, but pretty soon you could start seeing SPARCs trading on the stock market, and now you kind of have a little bit of a first look outline as to what the heck these crazy things are. And boy, oh boy, this market is nuts. Thanks so much for watching. Check out the programs linked down below on Building Your Wealth, and we'll see you in the next one. Thanks.